Hi, welcome back. Second hour here for Breakfast Extra. We've got our big story for this morning. Nigeria's apex bank is taking no prisoners in its battle against inflation. In a bold move, the Central Bank of Nigeria has raised the monetary policy rate by an additional 100 basis points, bringing it to a record 27.5%. The decision announced after the Monetary Policy Committee meeting underscores the CBN's aggressive tightening stance as it seeks to curb inflation, which remains at 22.8%. According to CBN Governor Olayemi Cardoso, this measure is necessary to stabilize the naira, attract foreign investment, and tame Nigeria's surging price levels. However, critics warn that this persistent tightening could have unintended consequences. Economic experts are raising alarms about the potential for economic contractions, particularly as businesses and individuals struggle under the weight of higher borrowing costs. With interest rates now at a historic high, the cost of credit has effectively doubled over the last 2 years, pushing small businesses and households into even deeper financial strain. So the big question remains, is this the right call to fix inflation, or does it risk choking an already fragile economy?
Now, to help us unpack this and the implications of this move, we're joined by Frank Fagbo, economic analyst from Business Edge and also Nairametrics. And we also have joining us Dumebi Oluwole, a senior economist at Sears. Now, together, we'll explore the logic behind this hike and its ripple effects across Nigeria's economic landscape. Thank you so much, gentleman and lady, for joining us.
Thank you very much, Frank.
Okay.
I don't know who to ask first. I'll let you make that decision.
Start with Frank.
So, Frank, first off, let's put this in concept, exactly what this means for the average man. Let's make it a very, very simple, exact description of the situation right now. I don't know if you can do that for us, Frank.
Okay, so if you look at the interest rate, it has increased. I don't want to use the word basis point because it looks like I'm going to be talking over the heads of people. But right now, 27.25%. And what that means is if an importer, let's say we go to Idumota or you go to Alaba, an importer who is interested in bringing in goods into the country, let's say spare parts, and you walk into the bank, oh, I need some loan to go facilitate this trade. You know what? The banks are going to give you that loan, not even at 27.5%. They're going to give you higher than the benchmark because they always add like 10 basis points to the benchmark, and you get it around, let's say 33%, 35%. And imagine what that is going to do to your bottom line. Remember that you've not even talked about profits. We're also going to be talking about the purchasing power of people have reduced over the months in the last 3 quarters. So your sales have dropped drastically on the average, whether you're selling luxury goods, essential goods, because people are literally cutting down on what it is they're purchasing. So I always say the economy is cyclical. So you've gotten to the bank to get loan. When you get loan at 30% or 35%, you're now going to trade and you put it in your operations for your business. When you put it in your operations, the price of that good will go high, will go up because of the loan. It's definitely who's going to pay back for it. It's the customers that are going to pay for it. And so when the price increases, it brings about further inflation in some way because the prices increase. The customers are coming to your shop to buy spare parts, and you're telling them, okay, it's now very, 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 the spare part is expensive because of the loan you got, and you're paying back at a premium. So you've not even talked about breaking even, let alone making profit. So you're not making enough profit for you to be able to have so much money to pay back that loan. And that's why we're seeing what is happening with the NPL, non-performing loans in banks. And people who no longer have the capacity to be able to pay back the loans they've accrued over the years because of how expensive it is. And it's definitely going to bring about low economic growth. We're not going to experience economic growth. But I can't really blame the CBN at this point in time because the CBN governor said categorically that his job is the toughest job in the world. And I think I wouldn't differ. I won't even beg to differ in any way because you're caught between the devil and the WC, talking about what do you do? You're thinking of economic growth. You're also thinking about inflation, which is a common devil. So his major objective right now is to bring down inflation. But where we're not seeing the work is from the fiscal policy point of view. The Minister of Finance, we're not seeing a lot coming in.
We're going to dive into that in detail much later. But Dashin, you had a question earlier.
Yes, I want to, put that question through to maybe.
Yeah.
Now, looking at the economic climate, we know how difficult it is for, everybody, even the elites. Is this the right approach?
The answer is yes. It might not really look like it because of how painful it is, considering the cumulative effect of every other thing that Nigerians are feeling, right? Yeah. So apart from the increase in interest rates, we're also seeing an increase in petrol prices. We're seeing an increase in food prices. We're seeing an increase in transport costs. And not only that, there are still queues at the filling stations sometimes. You go to the market, there's shortages of goods that you even probably need, right? And you're just generally stressed. There's a lot of stress. You're going to work. You have to think about work, and you look at a normal household, a woman that is probably going to the market. You have to carry your 5 children because, on average, the households in Nigeria about family of 4, right? So you have kids that you're taking care of, and the man as well is thinking of he's going to go to work. He has to provide for the family, and then he goes to try to pay for something. The ATM is not working. So generally, when you combine all of that, both the mental, emotional, and physical stress that people are going through, and when they now hear there's an increase in interest rate again, so when you think of the fact that your income is really not serving you right now, and you want to try to take a loan from the bank to make up for that, and you go to the bank to try to get that loan, you realize that the interest rate is higher. There's all of that, we call it, there's all of that economic and emotional duress that people are under. Right, but when we look at it from a policy standpoint, that's where the conversation is a little bit different, right? Because what the CBN is doing is it's pulling the levers that it has at its disposal to try to bring down prices. I remember Nigeria is currently in a different climate from where it was some 10 years ago, right? We are facing a cumulative of shocks where things that we should have done some 10 years ago, we're doing them now. Right, when you look at the subsidy removal, you're looking at the capital control measures on the FX market. You're looking at liberalizing the FX market. You're looking at opening the borders, right? So some of the things that we should have been doing on a staggered basis to ensure that the painful effect on consumers are not this much, we're now having to do them right now. And the time really is now to do it.
Well, you just said something that the CBN is trying to pull, the levers
at its disposal, yes.
Yes, to bring down prices. Can you explain
what that means? Okay, so as a body, right, the CBN has a few instruments at its disposal that it can use to stabilize prices, because the true mandate of every central bank in the world is to ensure price stability, right? And price stability in 2 senses. The first one is inflation, that is commodity prices. And the second sense is the exchange rate, right? Because exchange rate in itself is a price that we see in the exchange rate market, the forex market, trade currencies. And what the CBN does is that it manages both markets to see, okay, what is happening here and how can we ensure that prices do not go above our target? Because inflation in itself is the rate of increase at which prices are increasing. Not because we do not expect prices to increase, but we do not expect them to increase too rapidly so that the economy is not in a state of shock. And it's the exact same mindset the CBN has when you look at the exchange rate market. While we expect some level of volatility, we don't expect it to be too drastic at a certain point in time that it causes shocks to businesses and all of that. So at its disposal, the CBN has some instruments that it can ensure, it can put to use to ensure that that level of stability is ensured.
This is one of those instruments.
Yes.
So what other instruments are available?
So there's such a thing called moral suasion. There are other things like monitoring the banking sector liquidity, issuing automobiles, right, things like that. So open market operations, right? So what the CBN does is that on a wider scale, there's also something called forward guidance, right? And that's where the CBN comes out, tell everybody, we're doing this, so we're going to increase interest rates, so communicating with the market, right? So those are some of the levers that the CBN has at its disposal.
All these are under the purview of the CBN.
The central bank, yes.
So it's their discretion to choose which of these instruments to use. Why did we choose this? No, this is to you, Frank. Why did the CBN choose this instrument at this point in time? Is it out of panic, or is it out of, what exactly is it? Because we've already crossed that point where, inflation is what, 22.8?
No, 33. 33.88.
So we are, we're underwater.
Food inflation, 39 point.
Yes.
Point.
The headline inflation is 33.
So is this panic, or what could it be?
So if you look at what has been happening in the last 3 quarters, you see that they've been consistently increasing the interest rate just to bring down inflation. And that is, like, you have a common devil. It's just like your house is on fire. You're not going to be thinking of carrying your clothes. The first thing you're going to be thinking of is how to leave the building, how to just save yourself, save yourself. And I think that's what the CBN is looking at doing right now. That's why you see they're looking at, that's the lowest hanging fruit that they can hold on to just fight this inflation. And in the words of one of the members of the MPC, she said categorically that if inflation doesn't come down, they're going to see further increase the interest rates. And inflation always lags a little bit. Sometimes it takes like 180 days window for you to reflect, for you to start seeing the impact of the rate hike. And we've not seen that. We've not seen the impact at a point in time. I think the last two inflation figures were increased, went up a little bit. But the third to the last one was a bit reduced, and that was before we experienced the fuel price hike. And when you see that, okay, fuel, which is a common commodity in this country, it's a leveler when we talk about the Nigerian economy. We are a oil-driven economy, and if the price of fuel increases, you sure know that everything is going to increase. But I want to tone it down on CBN and their policy. I want to really focus on fiscal policy. What are they doing in addressing this? Yes, we're seeing the CBN governor tightening their seatbelt, trying to make sure it's like they're in an emergency mode. You're seeing him walking, kudos to him.
Panic. Is it,
Sorry,
that's the question.
Sorry, I'm just kind of coming here.
Yes,
so it's not panic, right?
Yeah.
It's economic principles. When prices are rising very quickly, the fastest tool at the disposal of the CBN is the interest rate. And this goes back to economic theory. And the ideology behind it is this: when prices are rising very quickly, right, and you increase interest rate, the expectation is that, because inflation by definition is when there's too much money chasing too few goods. So what it means is that the goods available are scarce, and then there's a lot of demand pushing that. So using that ideology, when you look at the cash in circulation coming from 2023 up until today, you see that it has increased it has almost tripled, right? So with using that data that the CBN has at its disposal, and then you look at banking sector liquidity, what that tells the CBN is that there's a lot of liquidity in the system that is, to an extent, at least nudging this increase in inflation. In an instance, what they would have to do is somewhat isolate the fiscal side of things that are driving inflation. So that on their end, there's logic as to why they're increasing interest rates. Now, what this means is that there's banking sector liquidity, which is increasing. There's cash in circulation that is high. So from their own sense, that definition of inflation is existing. And one way to help solve and bring down the rate of increase in prices is to increase the interest rate. And the reason is because when you increase the anchor rate, which is the MPR, there's a transmission mechanism into other interest rates in the economy, like your savings rates, bonds rates, and things like that. And if those other interest rates increases, what it means is that it incentivizes people to now put their money in the bank, right? So where you have, like, your savings rate is higher, and you're now encouraged to put more money into the bank so you can get more interest on it. So if that happens, right? If that happens, money supply is supposed to reduce.
Okay.
And if money supply reduces, we see that rate of increase in inflation where too much money is chasing too few goods, it lowers, right? So from the CBN standpoint, that is the logic behind increasing interest rates, to reduce money supply and then reduce that rate of increase in inflation. That is just isolating the fiscal side of things first, because those are the things, if as a central bank, you do not have to, not because you're not going to look at the other structural issues that are causing inflation, but because from your standpoint, because if there was no need to increase interest rates, the CBN will not have to do that. And now let's put this in context of what's happening globally. When we look at what happened from 2020 up until 2022, the global economy received so much shock from the COVID-19 pandemic into the Russia-Ukraine war. We saw global commodity prices rise. And what the global central banks do, they increased interest rates. And that's because of that logic behind it. The only issue was that in Nigeria, the transmission mechanism is relatively slower.
Okay.
And it's not a Nigeria unique problem. It happens with developing and frontier markets, where the transmission mechanism between when you increase that anchor rate and how fast it goes to other interest rates in the economy to start encouraging people like you to put in money into the bank, right? So that transmission mechanism is very slow. Unlike in the US, unlike in the US, where if the US Fed increases, its Fed's fund rate, you will see mortgage rate increase almost instantly, and savings rates as well.
I actually have two questions. One
Yes,
for
please.
you is that, how many more, increases are we likely to see? And for you, Frank, earlier you talked about, the impact. Would like to know which sectors of the economy, are likely to be affected by this particular increase rate.
Okay, if you look at different sectors of the economy, if you look at the inflation curve, you see one of the major drivers is food inflation. Anything that happens to food affects core inflation, it affects headline inflation and all whatnot. So food inflation is something is an aspect that I know that is going to be very much affected. And I would love to also buttress on what she said regarding the reason why you're seeing the CBN governor increasing the interest rate. You see that on one hand, using one stone to kill so many birds, two birds. One is to bring down inflation, another is to also bring in for us to have influx of forex, and because our money market instruments are going to be attractive and appealing to a lot of investors, and you're going to see investors from developed
So it's
markets.
an investors market.
Yes, exactly. Are going to come into
And it's that price
frontiers.
stability thing too.
Exactly.
I get it
On the exchange rate side.
Look at what our T-bills are telling us. Look at the government bonds. And that's why you're seeing it oversubscribed at every point in time in the last 2 quarters. Investors from developed markets
Frank,
are coming into
it's very
frontier
interesting now.
markets.
First of all, you just noted that it should have happened earlier. We
Yes.
should have gone through this earlier. It's just unfortunate that it happened at the same time we had the whole forex thing, the
Structural
whole
reforms,
fuels,
yeah.
petrol pricing and everything. So that's why we're in this
The bed
mess.
banks.
Yeah. So to your question, which you
I'm
asked
sorry,
earlier.
yes.
Yes.
I
How
actually
many
asked
more?
that because,
Yeah.
I remember reading, during the whole Ukraine war and all that,
Yes.
that there was an increase, and we're seeing another one,
Yeah.
right?
Yeah.
I mean, what I would say to that is it should happen as necessary, right? But it will happen at different degrees. I mean, at the beginning of the CBN's tightening cycle, we saw like almost a jumbo rate hike, right? Almost 200 basis points. And then we saw another one, 100 basis points. And then now we're seeing a 25 basis points increase. So what that tells you is that the pace of tightening is reducing, right? The pace of increase in the interest rate is reducing. And that is because when you also look at the rate of increase in inflation, the rate of increase in inflation is also kind of reducing. Not because inflation itself is not high, but the rate at which is now rising is also slowing.
Okay.
And that when you look at the difference between when we're in January and what the increase in inflation was in March, was almost a 3 percentage points increase.
So it's a
And then-
gradual slowing down until the plateaus and then starts to reverse.
Exactly,
So
exactly. But that doesn't mean they're going to stop tightening. So the reason why I say that is because inflation in itself will drive the CBN's decision, right? If inflation numbers today come in higher, right, for November, the CBN will have to tighten
Take
again,
action, yeah.
right? But they just might not tighten about up to 100 basis
So that
points
goes
or
to
200
Dashin's
basis points.
question.
Yes.
How many more tightening?
As much if inflation
Much
keeps
as
if inflation keeps rising, we will
have
still
more.
see
Okay,
the
so
CBN
now to
remain
Franco.
tightening.
So to the common man now, me.
Yeah.
I'm not a marketer. I don't sell
Please,
spare
me
parts.
too.
or
How
anything.
common are you? How
I'm
common
very,
are you?
come on, no. Come on, I'm come on. How does that affect me? I mean, I'm used to borrowing from the banks, especially the. I'm not going to tell you why.
Microfinance.
But what does that mean for me now? Will I still be able to borrow? That's a lot. I remember when it was somewhere around 18 or so from many years ago, very many years ago. Wow, time flies. Will I still be able to borrow at this point and repay at 27 point what? Oh, no, you did say that they'll also have to add all
Yeah,
these basis
so
points.
lending
We're
rates
talking
about 30%. Yeah.
You know what? Sorry, I asked that question. I'm not borrowing again. I'm not paying you back
Well, you can
33%
still
over.
answer the
I was
question.
even going to say that if you're talking about a common man, you seldom see a common man who goes to the bank to get access to get loan. So if you juxtapose increase in interest rate to fight inflation and economic growth, you put it in the hands of common man, he's going to tell you, please beat inflation, because he's more interested in making sure when he goes to the market, the prices of things are cheap. or not they're affordable for him to be able to afford it. Like the prices are a little bit lower. Right now, you're seeing it in astronomical numbers, exponential increase as regards the price of the price of inflation, and it's affecting everybody. So the common man would always edge towards what? Bringing down inflation. And that's why you're seeing them saying that, oh, the prices of things are becoming expensive. One of the laudable initiatives that I even saw, but I felt that it was channeled towards a wrong, there's a wrong approach to read, is one, I heard that there's free CNG bus ride in Abuja, but I was like, why giving the masses free CNG bus rides? Why not taking it to the farms? Why not making sure, okay, the farmers can get access to these CNG buses that they can use to transport this food from the farm gates to the markets? That entire logistic, that value chain would have a massive impact on the price of food. I don't know if you get my point. So farmers are looking for incentives right now to make sure the prices of foods come down. And one of the fundamental reasons why we're seeing inflation increasing, especially food, and particularly about food, because we have the numbers, more than 80% of food of Nigerians spend most of their monies, income on food. So it would affect it if the price of transporting those food items from the farm to the market is brought down. And that's what I feel that from the fiscal point of view, we should be doing.
Now, listen, from the two of you, you've actually totally described the situation. I bet the viewers also have a better grasp on the way.
I actually do.
And somewhere in my tea leaf, I can see the Minister of Economy somewhere in there for you, Frank. Thank you very much. Please remember us. But we'll have to end this segment here right now, because we've got another very interesting one, inside of which we'll be keeping Dumebi, because we want to talk about the very exciting moment when the president is like, oh, wow, the numbers from the NBS are great for the third quarter. So we're talking about that next. Thank you very much, Frank. You'll be leaving us with the delectable Dumebi for now, but thank you nonetheless.
Thank you.